Well, it's Halloween today on October 31st, but it's not just ghosts and vampires and zombies that are scaring people. It's the markets as well. Markets are having a big sell-off today. Nasdaq is down more than 2.7%. The S&P is down 1.8%. Gold was down earlier intraday as well. So just a lot of volatility today. What's happening end of the month? Gary Wagner is here to break down what's happening and what's next. He is the editor of thegoldforecast.com. Welcome back, Gary.
Thank you for having me. It's great to be back.
Every time I've seen you in the last couple of months, gold has just been hitting new all-time highs. So a new all-time high today relative to the last time we spoke, which is a few weeks ago. People can check out that interview, link down below. Let's just talk about today before we get your medium-term outlook. What is going on today? What is spooking markets? Pun intended, because it's a spooky day today, but markets are spooked by what exactly?
Gold was down about $40 today in trading, and the basic sentiment by most analysts cited that to the inflation report that showed inflation is continuing to decline, and that was the reason for the sell-off. I'm more apt to believe that some big funds or large positions liquidated to pull profits or used it as an excuse to pull profits. My belief is that today's $40 decline is not signaling an end long-term to this rally, but rather a one-off, so to speak. And I think that gold will continue to decline, that gold will continue to go up throughout the rest of this year.
On the back of heightened volatility from geopolitics or from the election, or we're speaking ahead of the election, by the way. Next week's gonna potentially change markets, right?
Absolutely. But you're absolutely correct. The fundamentals behind my belief is the geopolitical wars that are going on in the Middle East, Russia and Ukraine, and the upcoming election, as well as continued rate cuts by the Federal Reserve. Those are the really important components. Also, Dow Jones Newswire reported that central banks, especially the emerging markets, are going back heavily into gold. And so for those reasons, on a fundamental basis, I absolutely see gold moving higher from this point through the end of the year. And the chart that we had up, if it's still up, it says 2865, and that is my target right now.
Today's PCE data came out, like you said. Key inflation rate hits 2.1% in September, as expected, closing in on the Fed target. So inflation has come down somewhat. Core inflation rate was still at 2.7%. So that's still far above the Fed's target. Jobless claims fall to a 5-month low. This is from Bloomberg. Initial applicants declined 12,000 to 216,000 last week. Florida and North Carolina reported the largest drops. So on the surface, it looks like the jobs numbers are improving. Inflation is falling. This is good news, though, Gary. Why are the markets reacting poorly to this?
Markets can be fickle. The underlying fundamentals, at least for gold, are still very strong. Why the equities market sold off today is another story that I am not going to speculate to guess, but I do think that we could see stocks continue to stabilize and move higher throughout the end of the year. My primary focus has been on gold, and that I really believe will move higher from this point.
Okay, so let's take a look at the gold chart here now. On a 6-month basis, gold is up about 19%. Year to date, gold from the start of January, gold is up about 30%, I think. Yeah. So let me just get this right here. Okay. About 33%. Yeah, much higher if you count the price from yesterday before the drop. But anyway, 30% in a given year is high for gold for any year. And you're expecting
Absolutely.
even higher. By the way, it already broke your year-end target before we had this huge run up in the summer. You were giving me your 2024 target. I think it was somewhere around $2,600, $2,700. We've broken that. Are you updating your outlook now for the end of the
Yes,
year?
I have updated. On our last show, I was calculating where gold would go to by the conclusion of a primary third wave, but it was well in the past in terms of when we recorded. That was on the 16th.
Mm-hmm.
you have to update any kind of an Elliott wave count. You have to update as new information comes in and as data fills in. And so this is my most current target right now, 2865, to conclude the final fifth primary wave, which will happen this year, I believe.
Okay. Now, how high is that going to be again?
The number is 2,865.
Okay, 2865 is only a less than a 5%, about a 5% increase from here.
Something like that. I mean,
Yeah.
gold gained about 4% this month alone. So yeah, yeah, another
Okay.
5%, correct.
Uh, People have been calling for $3,000 in gold. That's not just um uh from bullish gold investors. It's from large banks. Goldman Sachs is calling for 3,000 by end of the year next year. You're not as optimistic as that. Why not?
I'm showing the most conservative estimate. It could go easily to 3,000. The key is I tend to try to be a little bit more conservative, but that would still fit within my model because my prediction on the fifth wave is based on the most conservative of estimates. If I do a 1.618 extension, it takes gold to roughly 3,000 and change. But I'm trying to be conservative. I would rather be conservative and then reevaluate once that target is hit than call for something that I'm not convinced, absolutely certain will happen.
Well, your forecast changed depending on who wins the election next week.
That's an interesting one. I don't think it's going to change from where my basic numbers are, but I think that regardless of who wins, there's a potential for a large spike higher. I don't believe that regardless of who wins, gold will come down, but it will have, that will be a very volatile day.
Okay. So the drop, the $40 drop today. Now if we were to speculate as to what could cause another $40 drop in the coming month or so, what could those variables be, Gary?
I think the main variable is some sort of ceasefire in Israel. Um,
Mm.
that would cause a lot of premium to come out because that has created so much premium is the Middle East crisis. That would be the primary thing.
You know what's interesting? The dollar's been strengthening all throughout September into October.
Yes.
Mostly October actually. It's come down a little bit since then. But if you overlay the dollar with gold, this is an interesting one, right? You see how basically ever since the beginning of August, um, the dollar has been declining. And then ever since the beginning of October, they've been moving up together. Now, the relationship between the dollar and gold this year has been spotty. In some months, they've moved together. In some months, they haven't. In October, they happen to have moved up together. So, what's your reaction to this movement here, this relationship?
Traditionally, the times we've seen the dollar move higher and gold move higher historically has been when the Fed was involved in intervention. And that's kind of what we're seeing now with interest rate normalization and they're cutting rates. And so when they do that, we get that effect. Um, the best way to describe it is that the most important relationship used to be that if inflation goes down, gold isn't as strong. And we're not seeing that. And the only times that I've seen both the dollar move higher and gold move higher is when central bank intervention is strong, which is what we have right now.
Well, the central bank isn't engaged in QE. In fact, they've been engaged in quantitative tightening. Um, Rates are coming down, but it's
That,
not.
well,
Is that what you're talking about? The cutting of
yeah,
rates?
when with rates coming down, that is still intervention.
Okay.
They are normalizing rates.
Yes. All
And
right.
so that's why the relationship has been spotty, as you're calling it, because that affects the dollar in a much more sensitive manner
Yeah.
because as rates come down, typically the dollar will go down with it because it doesn't yield as much in terms of treasuries.
I'm just overlaying the
Um,
dollar with the 10-year yield. Perfect correlation all year round, right? So the dollar here is the bar chart, the 10-year yield. Sorry, other way around. The 10-year yield is the bar chart. The dollar here is the purple line. And so the 10-year
mhm,
yield's been rising. Some speculate on the back of rising inflation expectations. Some speculate on the back of uh, stronger economic growth expectations.
yeah.
Certainly, the numbers that have come out over the last month would point to a stronger economy. What's your read on the yield and how that's impacting gold?
I think that the primary impact with gold moving higher recently is more on geopolitical uncertainty
Hmm.
and election uncertainty than yields or the dollar. It has been most sensitive to those two components. And that's the primary focus that I've had is because we've seen times when the dollar moves higher and gold moves higher, and times when we have that tight correlation. Gold moves up, it's typically because the dollar has come down.
Yeah.
We're not seeing that as much. And I think that, especially over the month of October, this last spurt from about, let's say, about 2620
Yeah.
to current pricing has been primarily fueled by geopolitical uncertainties and fear.
Just from a technical perspective, I'm pulling up a longer term chart of gold here. You can see that gold spiked to its then all-time high in 2011, as you know, and then 2012 saw a decline in gold, falling about 40, 50% to about $1,000, 1050 at its lows, and then eventually
Right,
went back up. I remember asking you during the 2020 to 2022 run up whether or not gold can repeat 2012. I remember this decline here. I remember this very well. We were doing interviews, and I was worried about this line going down, repeating 2012. And actually, it didn't.
right, right.
It went the opposite direction. Are you surprised that this chart pattern didn't repeat what we saw 10 years ago?
I'm not surprised because the circumstances are completely different. The geopolitical landscape's completely different. The move back to the first record high in the middle of 2011 was based a lot on monetary policy. This one has been based on that, but inflation and geopolitical uncertainty. That's what's fueled this to multiple new time record highs, is my take.
Well, geopolitical uncertainty is very difficult to kind of factor in with any analysis because we don't know what's going to happen with Israel and Iran, next month. We don't know how the war in Ukraine is going to progress from here. And so, as an analyst, when you're factoring in geopolitical risk, do you ask yourself, well, are these things going to get worse? And should I make the gold price higher as a result of the base case assumption that things will get worse? Or do you just kind of let things play out on a day-to-day basis and then reevaluate daily here?
My technique, I've always labeled as a hybrid trader, meaning the most important factors are obviously going to be the fundamental factors that are in play that could affect the market. The technicals will give me an idea of where the peaks and troughs come in. In other words, even if the market's going higher, it's going to correct certain points and then return to an uptrend, all things being equal. So I look at the fundamentals first, and then I model it with a bias depending on my outlook on if those fundamentals could shift. So, for example, when I look at what's going on in Russia and Ukraine, now that Korea has entered the mix. It was reported today by the Pentagon that there's 10,000 troops, North Korean troops, actually in Ukraine now, and that they are fair targets. So that brings a whole new landscape into what could develop in terms of how the US is viewing North Koreans' actions. And it could also play into the hand of North Korea if their soldiers begin to die in the Ukraine. And so right now, I think that those are the primary drivers, without a question, that
Yeah.
will affect gold through the rest of this year.
I'm looking at 2022 now. Remember when Russia first invaded Ukraine back in February 2022? I think it was February 22nd or the 24th, sometime that week. Anyway, gold shot up that week. Gold was already running higher throughout January, February 2022, for a lot of reasons. I remember back at the time, the real interest rate was declining as well. But anyway, the geopolitical risk premium at the time in 2022, when Russia first invaded, did not stick, right? It peaked around March, hovered around that
Mhm.
level, and then it came back down for a whole host of other macroeconomic reasons. What's different this time? And I ask that because there was ongoing tensions in the Middle East ever since last October. Gold went up, it didn't come back down. And then, as you pointed out, escalations happened in the Middle East, and now with Ukraine happening, with North Korean troops supposedly in Russia now, things are escalating. But gold's premium is not retreating like it was in the past. Why is the premium sticking more this time, stickier?
Because both of those conflicts, the Middle East and Ukraine, have escalated, and more importantly, there is a high potential that that could enter new phases. And what I mean is, we had Israel retaliate directly on Iran, what, about a week ago. And so, one of the things that was in the news feed today was that the Israeli IDF forces were
Mhm.
saying that a retaliation by Iran is imminent, and it will probably occur before the presidential election, which is, just what, 5 days away, or it's very, very short.
Yeah.
If that occurs, that's going to be one of the reasons I believe that this premium is sticking, is that there are potential potential reasons that both fronts, Middle East, Russia, Ukraine, will move to a new level of geopolitical concern. And that's why the premiums are sticking.
I know neither of us know what's going to happen in the Middle East, but can you maybe speculate as to how these wars will progress, just based on the news and the information you've gathered?
I mean, that's a tough one. Iran has vowed to retaliate from the last strikes. At first, we were hoping that because it was only military targets, they kept away from the oil infrastructure, the nuclear infrastructure, that Iran could possibly use that as a reason not to retaliate. But they have vowed to retaliate. My fear is that their retaliations from Iran have been all unsuccessful. We've shot down, the two major missile barrages came in, and they were ineffective. And what if Iran chooses to utilize Hezbollah and Hamas for another crazy attack into Israel as a retaliation, rather than another round of ballistic missiles, as they did about a month or 6 weeks back? Because they've done that twice and there has not been an effect, a result. And so that would be my fear, David, is that they try something different, because they realize the two times they have retaliated. And what I mean by that is retaliation from Iran directly, not proxies, into Israel. And so they've done that twice, and that to no avail. Israel retaliated from that, and I believe that they struck those sites harder than it was reported in terms of the initial reaction by the Iranian government. And then they came out with an updated statement that basically said, let's not overestimate or underestimate the damage they did, and we have a right to retaliate. So they were basically signaling that the conflict wasn't over. It's still tit for tat, tit for tat. In other words, they will strike again. My concern is that they deviate from what they've done over the last two occasions, where they launched large numbers of ballistic missiles into Israel that were, for the most part, all shot down. So if they use their proxies to actually go into Israel, that would be my greatest fear.
Okay, so explain to the audience, please, who may not be familiar with gold, why is it that gold goes up when geopolitical tensions spike up? What is the fundamental reason there?
It is considered the ultimate safe haven asset. And it reacts in a safe haven manner for a number of reasons, but geopolitical tension is one of the major ones because wars can really change economic outlooks and the economics of various countries and the decision by governments as to policy. Um, the effect of gold as a safe haven is the most sensitive when it comes to geopolitical tensions or escalating war scenarios.
Okay, one final chart I want to pull up to the audience. You sent me this earlier. What are we looking at here, Gary? These are Elliott waves, I presume?
It's a combination of Elliott wave, Fibonacci extension, retracement, pattern recognition. The chart we're looking at has got my most updated analysis and target for year end, and it's been revised from 2,700 to 2,865 because I wasn't able to project further than a third wave because wave one was complete, but you have to have wave one and wave two using wave one as a benchmark to predict where wave three could go. But that has passed, and I believe we've seen our corrective fourth wave. So we're in our final fifth intermediate wave, which is the final wave in a fifth primary wave, which is what we're in. So what we're looking at is these blue boxes are my basic calculation for each wave, 1, 3, and then 5. And it has been fitted to account for the potential for escalation on in terms of what's going on geopolitically, which is what gold is very sensitive to. And so it's showing the upper levels of where it could go for this last fifth wave. In other words, the methods I've used are still a hybrid method because I have to incorporate what is going on in the world geopolitically as well as economically. So
What's
what we're looking at is my latest target, my projection for year end 2024.
what's the downside floor for you, below which you would see more downside? Basically a support level.
My feeling right now is that we have not completed this long run. And I also believe that the downside is going to come once the fifth wave is completed, because then we go into a actual strong correction, such as when you look at what happened 2012 to about 2016, that correction was the correction from the run up from 800 to 1900. And so that's where I would start to look for floors. Right now, I'm still plotting where the ceilings are because
Mm.
I still think that this rally has got further room to the upside based on both the fundamental outlook and how that corresponds to my technical modeling.
Okay, very good. Thanks very much, Gary. Appreciate it. Where can we learn more from your work?
Thegoldforecast.com. And also, David, I was looking at our early interviews the other day, and we've been working together for quite a few years.
Hmm.
And also the fact that you hit 200,000 subscribers. Congratulations, by the
Thank you very
way.
much.
So what I wanted to do was to offer your subscribers some incentive if they want to check out our service further. If they do go and get more information from the site and they go to the pricing page and decide to try us out, there's a code that says enter code. And if they type in David Lynn, one word, they're going to get 30% off of our regular price. We've been working together for a while, and I just felt that this was a way I could congratulate you and reward your loyal subscribers, because 200,000, you started strong and you're finishing stronger. So
Well, thank you. It's
I'm
because a good
excited about
guest like
what
you
you're doing.
that we're getting a good program. So sure, no problem. Use the code down below. Enter David Lynn. Check out Gary's work. I guess that's as good as candy tonight. Instead of going trick or treating,
Absolutely.
get some candy from Gary's website. Appreciate your updates. We'll speak again after the election. Let's see how gold moves. Thank you.
Thank you.
Thank you for watching. Don't forget to like and subscribe.